Yeah. We were talking about the risk management. Is it okay if I take 2 minutes of this time and I share my screen about the hotkey?
Yeah, go ahead. Go ahead. All yours. Take it away. We're recording, so all good.
Yeah.
Go ahead.
Okay, let me share. Okay, give me 1 second. Share screens. If I can share the screen. Yeah, this is the one. Let me show my screen. Yeah, so I think that you can see my screen.
Yes.
Okay, so these are the two positions that I had with this spy shorting that. So to Brahman and Dean that we were talking, is Dean here as well? I think Dean is not here.
He's here.
Yeah, yeah, man.
Oh, okay, good. So these are the two hotkeys that I have. So what happened? Let me just switch to simulation. So I'm not. Okay, give me 1 second. I may mess up. Let me just change these to. Don't want to ruin my deck. Where is that? It's been away. Order templates. TDI apply. Okay. And then I'm just gonna do this. Spy. Spy. Let's just see that I want to short 636. A different strike. So these are the two hotkeys that I have. One is that it says that take the entry with the $50 risk.
Okay.
But that is just only saying that here is my stop loss. There is no target. So if I click here, you see that it's in simulation.
Yeah.
If I double click here, here is going to say that take that position. And so it's going to say two positions, $50. And if it comes to that 1.1, it's going to stop. But do you see any target? There is no target.
Yeah.
Majority of us are using these hotkey, the ones that are using the hotkey. There is no target. So this is good. The other one that I have, let me just exit this.
With a $50 risk, how many contracts do you usually end up buying? Like a couple of contracts, or?
Depends on your buying power, depends on the risk. So this hotkey is a $50 risk, and my buying power is just calculated. It said that your buying power is X amount of dollars, your risk is Y. It's just calculated. So here, because I was just risking $50 and I was clicking at the stop loss of 1.1, it's just an enter position was 1.25. It said that you can buy two. If I was with a different position, different strike, different ticker, it could be 20. It just automatically calculate that.
Yeah, makes sense.
Different one that I have. Let me just short it. I wanted to short it. I don't know why I was longing it. So let's just look at this one. So this one is a different one. In this one, I'm saying that I want to have a risk, but I want to have 5R target in place. Okay. This one, if I click that, is just put a position, a stop loss of $100, and also is automatically calculate the 5R.
Okay.
Oh, I see. Okay, that's cool. I'm going to get with you on that. Yeah.
Yeah, that's amazing.
This one automatically said that if it reached 5R, then exit. You can change that to 5R to 4 or 3R, whatever you're comfortable.
Right.
Some people on the options rather not to have this target, and it's because of the these gamma impact or the time impact, because over time the value could lose. So you may have to adjust this. It's up to you. For me, it works. So you can put the 4R or 5R. So most of the time, I rather just to enter with these days. But like I said, previously, look at these 5 contract, these 2 buttons that I have. I was entering these positions and press, and I was entering, I don't know, 50 contracts. And then although I know my stop loss was here, but I didn't know how much was it. And that's why when it was going against me, I was losing big. Because I didn't know how much was the risk. So the risk
Yeah,
management.
you didn't know what it was. Yeah.
Yes. I was entering it. It was good. But if it goes against me, how much I was losing? I had no idea. $50, $100, or $5,000.
Yeah, makes sense. Awesome.
So that key, this key of the 1.5 is, at one point I actually was removing it because it has a lot of temptation. So you see Avi, he's senior, he's taking this position, keep adding. He knows where is his risk and he can calculate it. I see that. I was sometimes asking him how much is, and he was telling me dollar value while he didn't have a stop loss, but he knew what is that risk. But we can't.
Yeah.
I mean, as a new option trader.
Yeah, no, absolutely makes sense. Would you mind sharing those scripts? Because I do have a script for equities. I'm not sure if that same script would work on the options chain as well.
The first one, the $50 risk without the target, it is in the Discord.
Okay.
Lotfried kindly shared that a couple of
Yeah, that's
weeks
in
ago. Yeah. But the other one,
forums
this one with the
of
target
hotkey
is not there.
forums.
Yeah, the other one with the target is not there. I will post that. Yes,
Perfect. Appreciate it. Thank you so much.
no problem.
With the
Yeah.
target, the one with the target is the best one.
Yeah.
Yes,
And you can drag that target up and down, right?
yes, I can
Perfect.
drag that. I can
Perfect.
just look at this. I can bring it here.
And
If I
Escott,
do the
does it work
remove-
with the advanced hotkeys enabled?
This particular one, I have worked with the what is it? DAS Pro, and
Yeah.
it has been adjusted to work with advanced option enabled. Because normally they are not.
Yeah.
I have spent a lot of time in order to fix this.
Yeah, if
Normally
you
they
can
don't
share
work with the
this.
advanced. You see, the advanced is enabled,
Yeah.
and this one is working.
Okay, perfect.
Yeah, it has been adjusted. So I will share that so you can use it. So you can change this 5R and you can change this $100. I will explain it in the Discord. What are the sections that requires to be
Yeah, for sure. That's cool. Okay.
Thanks so much, man. I really appreciate that.
You
Thank
say
you.
it was a hotkey forum?
It is in one of the hotkey forums for that we have, but I will highlight that so you will see it.
Okay, cool. Thank you, Ashwin.
Let me see if I can show you if I have it even as a hotkey. I have it hotkey and hot buttons. This is the one. When you see I will highlight that in there. The reason that my system is slow is because I have bookmap open just in case. So you get this share, the first one. See SS share here, this one. This is for $100. You can change it to $1,000 or $50. If you want $50 point, change it to 0.5, because this is options is times 100. So change
Yes.
this for the risk, and for the targets, I think it is here. Price times 5. Change that to 3. Change that to 2, to 4, whatever you are comfortable. For me, the big moves is usually around 5R. You can change it to 3R at the beginning. See whether it works for you or not. So these are the two things: the target and the risk. And I will share that before.
Okay, cool.
Oh, I think that you don't see that. Do you see you don't see that. Sorry, I think that you don't see the page. Do you see the table that I'm sharing? You don't see any table.
No.
Okay, sorry. I was just I was pointing to a ghost.
Yeah, I was looking on your screen and I'm like, where's he at? I don't see where he's at.
No, it's just because I'm sharing the let me share that the entire window. Entire window. I think this one, entire screen, sorry. Entire screen. This one is better. Sorry, my bad. So
There we go.
now you see it, all right?
Yes.
Okay, so this when you see the hotkey script, this $1, this is one,
Yes.
this is for $100. If you want $50 risk, change that to 0.5. If you want 1,000, change it to 10, because it's going to be multiple. That is
Yeah,
one thing for the risk. Go to the end, and then if you go back, you see only one section that says 5. Price times 5. Change that to 3, to 4, to 5, to 10, to whatever you're comfortable that your stats show. My stats shows that if I have a good entry, it can have 5R.
Okay.
Your stats could be 10R or 2R. Sorry, Avi, I hijacked your session.
No, man, that's great. I get to save my voice a little bit. Go ahead, take it away, man. I love it. That's really useful. Those fixed risk hotkeys they save my ass really so many times.
Yeah.
First couple of years.
The case is that we see you, we means me as a new option trader. No, I'm not talking about new traders, the new option traders. And we see that you enter a position and you can add to that. And we tempted to add to that. But the case is that we were talking in the Discord that we were CC big loss is because we don't know where is our risk, how much dollar value it is. But these hotkeys and entering them with the risk in place is going to help us. And don't add to that at the beginning. Let's see if you're successful with this, and then later on add.
Yes. Enter your position and leave it there. It gets complex when you start adding. But you don't want to add risk. You want to add size, and now you're thinking about other things. So, anyways, that's all. Once you get a good instinctive feel for price action, that's when you start doing this stuff. But the way to get that instinctive feel for price action is to firstly fix that risk. So use these hotkeys, get the fixed risk thing going, and really not just show up every day and trade like that. Trade with this hotkey. And the more exposure you give yourself to the market, the more it'll come slowly. And then later on, you can work on adding into positions, or rather scaling into positions, and then adding at another level on the way to the target. And there's all kinds of things you can do. But one step at a time. Get the foundations right. Very, very important. Yeah. And you said
for a step, I can stop sharing, and then you can start the session. If anyone has a question for this particular subject, because we don't want to have a dash sessions. I don't want to hijack Avi's session.
It can be a dash session. Don't worry about it. I love it. Whoever's got whatever question, that's what this is for. Right? Whether it's DAS or trading or psychology or fucking anything about life, I don't know, whatever, anything. That's what this is all for. So don't worry about it. But you said these hotkeys, you have it configured for options as well, right?
Yes, this is for options, and this one is particularly enabled for advanced hotkey enabled as well, because previously it was not working. I was working hard with 3 different DAS guys. They couldn't figure it out. The third one was able, and then I myself was able to fix it. So now it is working when the advanced hotkey is enabled.
Good. Thanks. Now we went through this before, I think, where Lovepreet had done the calculation. You have to divide it by 100 or something.
Yes, yeah.
All that stuff, yeah. You get
that one is just only with this one. This is the one that Lovepreet was sharing, was with the stop loss only, without the target. It's like this. Let me show you.
Yeah.
It's like this. You see, there is a stop, but there is no target.
Yep.
This one has, for example, you're buying 8 contracts. If it comes to this, I don't know, 0.44, it's just gonna stop. But what is the target? These days now, I like to have a target as well. So if I quit this, and if I sorry, setting this one, where is that? If I enter it the same position again and click this one, the other one, this one plays a target as well with a 5R.
Excellent.
Yeah. With this risk, I have risking $100. If it comes to that $500 reward, then it's gonna quit. If I see that there is too much of a I don't know, price action against me, I don't know, I don't want to trade that, I don't want to manage the trade, because usually that's not a good idea. But just in case, if I have to change the target, I can bring that down, and that it has a target. So it's just put a range bound. This is good. If I have to step away for a while, I can have a range bound, and this starting with a range bound, not just entering it later on. Just starting with a range bound, because I know that I have a temptation to add to a position. This is stopping me.
That's great, man. That's really good stuff.
Yeah. I will share that in the Discord.
Cool. Thanks.
Yeah, for sure. I'm gonna get in there. I might private message you if I have some questions.
Definitely, no problem.
Yeah, guys, and in the forum, we have a whole forum section within our Discord. One of the forum topics is DAS hotkeys. So all of it's in there if you're ever lost. That's where you can find all this stuff. And we have a few different forums for different things. Great. Thanks, Asgar. That's great.
No problem. This is the one that I'm going to place. Is that DAS defined hard risk is for option. I'm just going to put it here. This one is already, I think. I'm just going to put it and put a new post on this. Anyway, any question before I just close about DAS, if I can help?
Yeah, this is a good opportunity for anyone stuck with anything about DAS and configuring the platform, getting it to work, all this stuff. This is a good moment for you. Please don't message me asking me how to set up DAS. It's one of the things I least like to do. So, this is, yeah, Vinay, go ahead. You alive, Vinay?
Question typed. What time frame should we use to look for Candlelight and naked first? Okay, that is a question for you, Avi. Not for me.
Yeah, time frame to look. Okay. The Naked Forex books, is specifically about Forex trading. And I think they talk about the 4-hour time frame, if I remember correctly. Here's a simple thinking. There's no specific time frame that you should use. I personally use a 30. But really what you should think about is get your levels off of a higher time frame, a bigger time frame, and then wait for setups on the bigger time frame as well. And then wait for confirmations on the small time frame so you can get that tight entry. That's the whole advantage of the small time frame. And then a few other things later on for managing trades, but I don't suggest active trade management. I do it because I'm doing 0 DTE contracts, and that gets pretty heavy. So, but I don't recommend it. So anyways, 2 time frames is what I suggest. Personally, I use the 30 and the 1. So you gotta use what makes sense to you. Some people perceive the 15-minute. It's much easier to perceive for them than the 30. Some people prefer the 60. Some people prefer the 5. Whatever you are able to perceive, whatever comes easier to your eyes is what you should use. For me, the 30, because I find that it's as big as you can go in a day trading perspective. You get bigger than that, and now you're looking at swing trading, at the 60-minute chart. With the 30, there's enough candlesticks to get really good setups, even multiple setups in a day. And also they're big candles, so you're targeting big moves, getting levels off of 30-minute charts. It works. So I've become very comfortable with a 30-minute chart in the last 2 years or so. But that's just me. So again, there's no specific time frame. I recommend cycle through a few of them and see what makes sense to you. Personally, I just want the bigger moves. I like to put on the trade. I don't want to have to deal with it too much. 30 minutes just works nicely. So hope that helps. And anyone else? Yeah, go ahead. Just spit out your questions. That's what we're here for. If you don't ask questions, I'm going to be quiet here and maybe start playing the guitar or something. So it's up to you guys. This is for you. Good. Is the session over? Are we done?
Hey, Avi, I missed the AM session, but SPY didn't look attractive to you as a short on a larger time frame.
It did not. Well, firstly, the levels were just too tight, so once again, no trading. But as far as the setup's concerned, it didn't really. It was not neat. It was okay. Well, here, I'll share my screen. Let's have a look. We can look at this stuff together.
Are you still kicking yourself, Gurinder?
What up?
Got into something.
I'm just banging my head to the wall.
Nothing out of that SPY trade.
Just banging my head to the wall, man. What up?
So, all right. So on the SPY trade here on the chart, you see these levels are just too close together for any sort of opportunity. So I didn't even bother. So in that sense, I didn't even look at it. Nothing looked good to me. But you remove these levels. And now we're looking at, you have these lower highs right up here, getting set for a breakthrough of that buyer down there. That is interesting, right? You can see the buyer was there earlier, and you had a false breakout here as well. I think somebody took this false breakout earlier. But looking at this now, using just blind as an upline, using levels that I would just use, mark myself without Avi levels. Lower highs, and then this pull up before the dump. So once this red candle closes, not closes, but let's say it comes down through the level after that pull up, that might be an entry opportunity. Or you wait for it to close, it goes all the way down, comes all the way back, and then you're thinking maybe it retests, but getting short here after that closes with this big wick, I'd be scared of doing that. I wouldn't. I'd be, there's buyers down here. I don't know what's going to happen. They're going to push it up or not. And these buyers are here from, right there, overnight. They were there overnight. They're telling you they're right there. So even on this perspective, I don't think I had any conviction to go short anywhere. It's moving, sure, but nothing for me, nothing that I would look at. Let's go to the 1 minute and see what it may have looked like. Yeah, there you go. There's that short area, breakout, retest, another retest. It would have all worked out fine. But the setup wasn't neat on a 30 minute, even if you're just looking at levels this way. And again, personally, I don't like to look at levels like this. I just use the Avi levels, and if it's there, it's there. If it's not, it's not. That's it. I don't want to go messing around finding levels, and I don't want the freedom to put levels on the chart wherever I want. I've made a big mess of that in the past. And once I get into one or two winners, one or two losers, whatever it happens, the mindset shifts, and then you can put levels any way you want just because you want to trade. Now you got a problem. So that's why I don't do it. And yes, that's why no trades today, no trades. This whole month has only been one trade, really. We'll see. It might show up tomorrow. I have no idea. You never know. So anyways, I like these automatic levels where I don't have the freedom to move them. It makes life easier, much, much easier. Cool. What else we got here? Al Brooks, good source for learning price action. Al Brooks, never heard of it. Books for price action. All right, let's do this. This is I got a whole stack of books. Hold on, let me get them out. All right, so this is basically the first book I ever read on anything to do with the financial markets, and it's nothing more than how to read candlesticks, really. Japanese candlesticks, Steve Nissen. A lot of you have heard me talk about this book. Definitely a very, very good book. Most of my trading is based on stuff in this book. It's just patterns, and even talked about measured moves, moving averages. All that stuff's in here in an 80-20 way. It's so simple, easy to read, easy to understand. It's even got a bit of a story to it in some places, ancient Japan, all that stuff. It's good fun. So I recommend read this book, and you'll even learn about everything you need to know about all the other indicators outside of candlesticks. Pick one that you like, one or two that makes sense to you. For me, measured moves make sense, and so that's it. That's the one I'm stuck with. So that's one. And the other one that really I recommend reading after reading this book is Naked Forex, which is this one right here. This one. Again, it's about Forex trading, not about stock trading, but I just took it and applied a few of the concepts to stock trading, and here we are. So that's it. For price action, that's it. You can get into more depth on volume analysis and all kinds of other stuff. To me, it's all garbage. I've spent years reading all that. Completely a waste of time. Better off just keeping it simple and doing it this way. So that's Naked Forex. Some of you guys can type it in here, And all right, thanks. Yeah, Japanese Candlesticks by Steve Nissen. Both very popular books, very simple. Good reading, really good reading. Let's see, those two on price action. I've read plenty of books. None of them have been useful. Let me see, I've got a whole stack here. There's other stuff on wealth management and all that stuff. That's something else. So, yeah, something else. What do we got here? Andre, regarding DOS, basic subscription we all need. Still deciding, start with DOS beginner or try TWS. Yeah, TWS, is that Trader Workstation, right? With IB, I think it is. I've never been able to trade on that. Well, I take that back. I did take one or two trades on that. Those were like 60-minute charts and stuff. See, it depends what you're trying to trade. There's a few guys in here. Anyone in here trading off of not DOS, off of Thinkorswim or anything else? I know a few of you.
Yeah, but if you don't mind just me stepping in here, because I just reached out to DOS yesterday as well regarding that question that Andre just has. Regarding the basic subscription, you won't have access to the options chain. The only access you'll have is just the equities. If you're not trading options, then sure, that might be all that you need. And if you're not using level 2 as well, then it should be more than enough, because you're essentially just subscribing to the live market data, right? But I think the best value is the standard user, which does give you access to the options chain as well, the level 1 data, but just not level 2. I personally am not using level 2, so that's why I've decided to go from the deluxe package to the standard user.
Awesome. Thanks, Ramon. There you go, Andre. So it depends what features you're looking at. And here's my suggestion: as a beginner, don't get all the data. Keep it simple. You don't need the level 2. You don't need the option stuff. You definitely don't need options as a beginner. Oh my gosh. The less at your fingertips, the better. You can just focus on learning to read price action in real time and trade the simulator that comes with the DOS platform. I think that's really powerful. And there's even a replay mode in that in DOS. Make sure you get the replay mode. I think that's very, very powerful. I've used that so much over the years. So try that out. And yeah, Rachel saying she uses Thinkorswim. If you have any feedback, Rachel, for Andre about Thinkorswim, let them know. Yeah. There's plenty of platforms out there, guys, but for me, personally, I just use DOS. It's very fast. It's effective. When I get into a heavy size, I need that precise, instant execution. I'm not messing around with it. But that's me. That's why I'm using DOS. And again, I've never, ever used anything else. I was introduced to it in the beginning, and I'm still here with it. And yeah, I have some sort of premium package or whatever it is, but I don't use 90% of the features, level 2 and such things. So level 2 on the options chain, I don't use any of that. It's not necessary. There we go. Mark, you only use Bookmap. All right, yeah, and you get a discount with Schwab as an American. There you go. So there's a few different ways to do things. None of them are right or wrong. It just depends on what you're into, what style of trading. I mean, there's people here trading on TradingView as well, which is a browser-based application. With some of those premium packages there, you can get some price action. Nowhere near as effective as DOS, nowhere near as fast, but maybe you don't need fast. Maybe you trade off of 5-minute candlesticks or 15-minute candlesticks instead of the 1. Okay? In that case, you may not need DOS at all. Again, I don't know. I have no experience with that. I haven't used any of these other platforms. But there are plenty of opportunities. And TradingView also has market replay. Ramon, cool. I didn't know that. Nice. There you go. There you go, guys. Plenty of stuff here in the chat. So plenty of feedback for you. Cool. Good stuff. What else do you want to talk about? Got my whole bookshelf in a mess now. Everyone know what you're doing? Everyone sorted? No questions? All good? Just spit it out, guys. No questions you've got. That's what we're here for today. They can't. Yeah, I've moved away from traumatic levels. I just use Fibonacci levels nowadays. I've evolved from that. Traumatic levels are great. Whenever you see me try and mark levels, like we did today a few times at the open, I go and use those traumatic levels. Very powerful stuff. And I have that webinar recording. That's the old one from 2024 or 2023 even, I think. I gotta edit it a bit and I'll upload it. Let me see if I can do that today. It shouldn't be a big deal. I should be able to do that. I'll get that up for you guys. There's 3 webinars that are missing right now in our videos. Just gotta edit a few things there and I'll put it up. And again, video editing is not my strength.
Why did I get out of SPY?
SPY. Yeah, look at you. You were in the short earlier?
I was in the short and I was like, I don't know why the hell I got out.
Don't dwell on it, Gurinder. There'll be another day.
Yeah. Yeah.
Hey guys, I'll show you this. Before I went into the Fibonacci levels, measured move stuff, I used to use basically automatic levels, previous day's highs and lows. So if we go with today's action, just put on yesterday's high right there and yesterday's low right there. You have the high of 2 days ago right there, and the low of 2 days ago right there. You have these levels. Not too complicated, right? If it breaks through, well, this is yesterday's high, so let's go into the one. Now you just have these levels. On the 1 minute chart, you'd wait for it to bounce off of that yesterday's high, which it didn't give you a clean bounce. This hammer happened after a big candle, so you wouldn't be going long here. But then it broke into it. Look at that. It broke in, and here's your breakdown aligned nicely with a 5-minute ORV. You could get that from yesterday's high to the previous day's high, right? Or if you're thinking there's not enough room here, you'd wait for it to do something off of the high of 2 days ago, and sure enough, you're catching this breakdown. You may stop out once or twice. I think the setup actually was decent here. Again, you have these lower highs, you have the conviction, and off you go. And look at the target. It's right there. That's yesterday's low, and the low of a couple of days ago is right there. Not too complicated trading. Again, automatic levels. There's no hunting for levels. There's no messing around with it. The levels are just on the chart. You turn on your dust, and the levels are right there. And then you wait for the price to get there. If the price gets there, then you use your indicators. For me, my indicators are just naked candlesticks. Whatever indicators you like, and you're in this. This would work just fine, just fine. I haven't taken a trade most of this month. If I was using these levels, I'd probably take a trade almost every day this month. But again, nothing wrong with this way of trading. There's many different ways to do things. For me, the key concept here is automatic levels that you can believe, that you trust in. So simply, previous days highs and lows are not too complicated. If you just want to use that, use that. I just use Avi levels nowadays. I just find them easier than this. I wait for 30-minute setups and stuff. What else we got here? Okay, you guys, Andre, Rachel. Okay, you guys got the whole DOS thing going, TOS thing. Sujit, what are you saying? AMD? Looking at AMD at the moment? Looking at pre-market high. Yeah, that's it. That was AMD's big breakout today. Made a huge move. Coming back to it, broke out from. Now, here's the thing. Would you consider this a retest of the breakout? What do you guys think? Any opinions on this?
No, because move already happened.
Yeah, the move already happened. In my book, the move already happened when it hit this level. That's it. There's no catching the retest after this. This was early in the day. Now I don't know what's going to happen. Let it be. I have no idea. But that's just my trade book. But then you take the levels off. Oops. Sorry. Oh, this is the measured move. Yeah. Anyways, you can take levels and let's see. What else? Let's move this out of the way. Let's see if we get a good example out here. There. Yeah. Oh yeah. Look at AMD. Bounce today's.
Good morning.
It's an automatic. Let us show
Oh,
you. Good morning. It's funny. Hot mic. Anyways, we saw this earlier today. Look again, just using previous day's highs and lows. In this case, it just bounced off really quickly and aggressively. If you have those indicators to tell you that, off you go. You have that in the morning. I wouldn't take the bounce here now. No, this day is over for AMD. Oh, and here's one. Let's say, for example, you had a level somewhere in this zone, right? Let's say you had this 180.55. Would anyone have taken the short? Would anyone consider the short here? What do you think?
Yes.
Why?
Given the strong bearish hammer that was formed on 30-minute.
Mm-hmm. Yep, that's it. This is a good one. This is a good reversal pattern, but there's a few details beyond just a bearish hammer. You want the tail to be 3 times as long as the body, which kind of looks like it is. It's happened after a bit of indecision right there. They had one strong move up, and this has wicks on both sides. So it went down first, then it went up, and then it put in this hammer. At the tail, there's plenty of room to the left. And you zoom out, it's never been there, it looks like. And then the new low is the entry right there. And you're in this. So the setup is there. Once I see this hammer close, then I zoom into the 1 minute chart and see if there's an entry with a high risk to reward and all that stuff. These reversals I would take, no problem at all. But we had earlier, I think Apple on a 1 minute chart, and you guys were asking about that reversal. That one, no way. These are the differences, the details you want to pay attention to. There's not many.
Do you mind zooming into the 1 minute chart? I just want to see how the price correlates.
Yeah. So now this level I've got here, I've just randomly put the level there.
Yes.
Okay. So let's say it closed at 11. The hammer closed here somewhere. Yeah. where would you enter? Would you be able to identify this as an entry and go stop right above it? Do you have an indicator for that? Is it below the moving average, holding that, or something like that? And then where'd you target? Probably target right here. Where the buyers came in on the ORB right there. Just about there, perhaps.
Cool.
Yeah.
Thank you.
But I only enter near the levels. I don't enter anywhere in between. I don't use that stuff. Yeah, with the accounts, go ahead. Yeah, you on the mic? No? Yes. Come on when you're ready. Dennis, you want to look at SMCI? All right. Oh, look at this thing. Strong and then down, huh? These are the Fibonacci levels from today. Yeah. Is it? Yes, it is. Yeah. When I have levels like this, then I'll pay attention to the SPY. It's far apart. Anyways, so what are you looking at, Dennis, on SMCI? You asked me a question. You asked me to look at it, so I'm looking at it. Anything else? Breakdown. Here we go. Low of day, just about an Fibonacci level. It got there, it messed around here. These descending lows, you have a bit of a flat bottom there. Here's the breakdown. Here's the retest. And looks good for the week move as of now. For the move down. It's messy. Big candles are messy. But it's making these lower highs, and it's breaking low of day. Right there, it broke it. Made a new one and broke it. Made one there and broke it. Right there. Let's see if it continues to break. It's got a good pattern. Lower highs and lower lows. Basically breaking lows of days. Lows of the day all the time. So, yeah. Makes sense. It's going to be difficult to hold. You can see how it's moving, right? It's erratic. It's hard to trade. But it's there. And the key is to put on your position, put a stop outside your level, and close your eyes. Don't look at it. Or zoom out. Look at it on the 30-minute. It makes it easier to look at. And you got that level down there. That Fibonacci level pretty much aligns with yesterday's support. That makes sense. It's a good place to target. Yeah. What do you got, Vinay? You're finally in here. Yeah, fix your browser, man. Come on. Took you 2 hours to fix your browser. Oh, man. Why is there a huge gap in the SPY chart around yesterday at midnight? I don't know. I don't know why there's a gap. Anyone know why there's a gap on the SPY chart overnight? Whatever the overnight news was, it doesn't matter. Yeah, Mark bought a few contracts. There you go. Now it's gapped. You see, these are the things that, to me, is all trivial. I don't spend my time looking at this stuff. I don't care. All I know is what the candlestick's doing. That's all that I know. That's all I care about, really. The rest of it is a bunch of rubbish. There's a lot of noise, a lot of people selling newsletters. Yeah, I'll tell you why this SPY is gapping up and down and all this rubbish. Forget about it, man. All you need to know as a day trader is what are the candlestick patterns at a level, and does it provide RVR? If it does, and you get the setup there, the candlestick pattern, just put it on. If it's not there, don't touch it. It's as simple as that. The rest of it is all beautiful distractions and wasting time and energy buying newsletters and all these sorts of things. That, again, I've gone through that whole cycle. It's a waste of time. It's more trivia. People on Wall Street love to make everything sound complicated to make you lost. And so now you have to rely on them because in your world, it's all too complicated. You can't figure it out. What a lump of crap. Really, big lump of crap.
Does the SPY look like it has bottom to you?
It looks like it's gotten into an area of a lot of chop right about here. You can see this a few days ago. And yeah, very likely it's the bottom because there are buyers down here. The move started from about here. So this could be the bottom. If you're in the short, I would be out of here. I mean, that's the level I targeted yesterday's low, basically. And the low of 2 days ago as well. Anything beyond that continuing short would be quite a bonus. Especially got in earlier and we shorted this thing. It's probably going to be choppy. Again, here's a fractal pattern philosophy. Whatever has been happening is likely to continue happening. So right here, you're getting into it. And last time it was here, it got stuck here. What do you think is going to happen this time? Most likely the same thing. Most likely. So I'd take the risk off, and I wouldn't put risk on over here unless I get a big pattern set up or something. So, yeah, Chrome, Google Chrome. I mean, you got to clear that cache every once in a while, otherwise all these sites don't work properly. It's a heavy software, right? Very useful, but heavy. Cool. What else? What else, guys? Anything else? You all know how to trade. You know how to make millions and millions of dollars every month out of the stock market without making a big fuss about it. Most people love to make a big noise. Look at this, look at that. No, you're funny. Seriously, in the end, it's all a game of probabilities. And people do this not trying to, but people generally think in guarantees. I mean, again, that's the whole rat race thing. And so in loading up on indicators, you're running for safety, you're running away from probabilities, you're trying to find this guaranteed thing where you can go YOLO on a trade. Most people do this. And you end up just exhausting yourself with a lot of trivial crap. And in the end, it's still just the same probabilities. It's 50-50 whether it's going to go or not. No matter how many indicators you look at, no matter how much philosophy you study about why the market moves and why the 8 a.m. candle is the way it is, it doesn't matter. It's called running for safety. I put a whole few hours of that in the course material. You guys can check it out. It's here in our video library. It's called running for safety. Most people do this. And then, of course, there's people who love to sell you indicators and charts and whatever else. So you don't need all of that rubbish. You just don't. You don't even need a big screen. All right, what else, guys?
Could you open AMD? 1 minute.
Indeed, 1 minute, sure. All right, what are you looking at?
Yeah. So would you enter this at the open at 1 minute? So it tests this one of the dramatic level at the open.
Your voice cut out there, right in the middle. Your voice cut out. Where are you asking about an entry? Oh, here you go. You typed me. Enter 1 minute at the open. Test the 1 minute traumatic level beautifully. Yeah. Look at this. If you look at some of my trades from 2023 and early 24, you'd have seen my entries down here. A lot of entries here. A lot of my trades were I enter within the first 20 seconds of the day. Most of my trades, and then I'd be partialing it up here. And when this candle closed, that's it. That's the end of the day for me. You know, about 5 minutes done with the day. Of course, there's a lot more money to be made than that, so I don't trade that way anymore. But yeah, there's a way to do all this. You can pre-plan it. Your whole plan before the open is if it bounces off of the previous day's high, you can get long, and the stop should be right below previous day's high, and that's it. But it starts jumping around is very difficult to trade, and you never know. Sometimes it pushes down and it continues down. Sometimes it goes up. Sometimes it goes right past your stop because it's so volatile at the open. There's easier money to be made. I can't even put on a big size doing this. I stopped doing this, and my regular winners went from something like 5K into the six figures because I stopped doing this, stopped trading like this, and going to the bigger stuff. So I suggest don't get too excited about it. Let it go. No big deal. There's plenty more money to be made without so much risk. Look at that. It's a big old peak. Cool. There's that. What else, guys? Another 15 minutes or so in here. Let me know what y'all want to talk about. We do this every Tuesday for you new guys. We haven't done it recently. I was traveling a fair bit. But every Tuesday in here, just basically Q&A. And we even have a forum section where you can type in your questions during the week, whatever questions you have. And I'll just go through them in here, and we'll find answers. So,
Avi, I have a psychology question.
Yeah.
For starting out, do you think it's easier to build mental capital if we don't trade open?
well, building mental capital and conserving mental capital are two different things. But yes, don't trade the open. Your mental capital will be in a much, much better place. I mean, even now, I avoid the open now. Usually 4 or 5 minutes while the SPY is jumpy, even if it bounces off my level or whatever, I won't touch it. Just too jumpy. Saves a lot of mental capital. Very important. Save it for the big setup that'll happen in the next 30 minutes. And then put on the trade. Really put it on. And again, when I started doing this is when my trading exploded 100-fold. So yeah, strongly recommend stay away from the open. You don't need that rubbish. You don't need it. And I'll say it, it's going to piss off a lot of guys, but only the amateurs trade the open.
Like, what was your trigger for you to make that transition? Obviously, you were profitable trading the open, and I would imagine you were also calm back then too. It seems like you have this personality about you that you were calm. Because I feel like one of the thing about trading the open is obviously it's fast and furious, but it also makes your FOMO like worse, because you feel like, oh crap, I caught the wrong side. Now I have to go back in on the other side. But obviously, I know I'm not supposed to be doing that, and I'm like, oh, it's hard.
Yeah, yeah. So one thing that has actually been standing out for me a fair bit, and I've been making quite a few decisions based on this, is the amount of money not made. Just looking at that, I get into whatever trades and I end my day, and I look at it later and I realize, oh my gosh, there was so much money still to be made. Whether I waited and got into another position later, or I just left the position on for a while, whatever. So just approaching, old price action or screenshots from that perspective, what so much money not made, and then that doesn't matter for me. It didn't matter if I was profitable or not. I was already making plenty of money to pay the bills and all, but there was 100 times more money to be made if I just stayed out the open and targeted the bigger moves and let all the guys get chopped up at the open and do all that. And even me, I would get chopped up, maybe 2 or 3 losses, and then 1 or 2 winners, and then I'd be all right, fine, make a few grand and go away. But just avoiding that and looking at a bigger picture setup, I realized if I just look at a 30-minute picture setup, I would not even bother with the open. I'd probably trade 30 minutes or 2 hours after the open, and it would be a monster trade. Most of my screenshots showed me that. That was me just journaling. Journaling for me is nothing more than looking at screenshots, just sliding through them and writing down whatever thoughts I have on a notepad, and even make up some statistics about it. And so yeah, money not made got to me, and so I tried to figure out a different way of trading. So then I moved into the 30-minute charts and found different levels. And even more recently, in the first quarter of this year, so I've said this to you guys many times, I took quite a lot of good trades. A lot of them worked beautifully. It was a big quarter. And a lot of times, though, I would close the day probably within 2 or 3 hours of the open. And but then I'd take the screenshot of the price action at the end of the day, and you can still see another 2 or 3 setups setting up and working later in the day. And I went back and calculated the entire quarter. And I looked at the position sizes I would have put on, as well as what would have stopped out and what would have worked. I landed up at approximately $10 million not made, just because I said I'm done for the day. It's like, trying to think about that kind of number. So I decided, all right, that's it. I don't care if it's a winning trade or a losing trade in the first 2 hours. There's another setup coming. I have to find a way to take that. The only thing that should stop me is if I'm mentally not there anymore, if I'm exhausted. So that, for me, money not made has always been a bit of a decision maker for me as far as evolving my strategy is concerned. It's not about I need to make more money. It's just, no, it's a performance thing at this point. And the P&L is just a scorecard. So that's how I'm seeing it. But, that's my way of thinking. So I'm telling you guys, there's a lot of money to be made. You just keep your head on your shoulders and don't go crazy. There's so much money to be made. Are you crazy? It's so much. I mean, look at SPY right now, bouncing off of the low of 2 days ago. Ideally, here's a breakout and bounce off yesterday's low. And here, take that reversal off. I used to take this stuff all the time. No big deal. And you have the setup. There's the obvious short there, and then there's another long.
4306 is going home, Mr. John.
Okay, thank you.
Hot mic, Z, hot mic. So I mean, here you're short. You can take the other setup long. There's 2 setups. So each of them is $500,000. So arriving at a $10 million number is not too far off. These are obvious positions for me. I've taken these before. So, anyways, that's how I feel.
Avi, I have a volume question. I know you don't use volume, but you gave us a little lesson the other day. So I just want to confirm, Is that stopping volume for the SPY? Like when it hit the when it made like a hammer on the previous two candles ago on the 5-minute chart for SPY?
Yeah, so if the volume, now in hindsight, if the volume was large, like twice as big as the previous couple of candles, then yeah, people call that stopping volume or exhausting volume or whatever it is. Yeah, that's a common term for it. Yeah.
So you would compare that to the previous candle, and then if the volume candle is a lot bigger than the actual candle size that it prints, right?
Well, firstly you compare it with, when I used to do this, I'd compare it with just the previous 3 or 4 candles. In this case, you have these two compared to those look like they would have been low volume candles most likely. If this one is tremendously much more, like twice as much volume as these 2 previous candles, then you have something to work with. It's telling you that it's probably buyers. And where is the volume? Is it down here? Most likely the buyers are right down here buying it up. All of that volume happening here at 6:35 if you're watching the tape, you'll identify all those things. And now it's just getting complicated because you need volume, you need to know the tape, so you know where the volume is precisely. Maybe you're using VPOC to identify it, but then you zoom in, zoom out, and it gets complicated. But anyways, without getting into all the complications, basically, in the 80-20 sense of things, whichever candle has the biggest volume, that's the candle you can trust. The more volume, the more you can trust it. That's the 80-20 way to use volume, very simply. So if there's massive volume on this hammer, you can trust the hammer. And this hammer is a reversal setup. That's a good one as far as naked candlestick trading is concerned. Right? You can use that. But now here's the thing. In real time, when this 5-minute candle hammer closes with bigger volume than the previous one, you still wonder sometimes, is it really bigger? Is it big enough? Or is that, am I just saying, you only know a few candles later, then you have this hammer candle sandwiched in between whatever's around it, then you can see, oh yeah, that was big volume. At that point, it's too late anyway. The hell with it. So at that point, it doesn't matter. And there's a lot of subjectivity that comes into it. And that's where I don't like it. I like to keep it black and white, minimize the gray area. And to me, that's just simple candlesticks. Wait for a 1-minute candlestick to close. I mean, how hard is that? Come on. You can do it that way, right? Not too difficult. So, yeah, that's how I do it.
Thank you.
Sure, yeah. Yeah, there you go, Alex. The power behind the punch. Yeah, when I used to use volume, that's exactly how I used to think about it. The more volume, the more power. But again, it's all subjective. How much power is enough to turn this thing around? So there's a lot of different things going on.
Avi, I have posted the both hotkeys that I mentioned in the forum, and also put a link in the QA section.
Beautiful. Thanks, man. Thanks, Oscar.
No problem.
Awesome. There you go, guys. Those of you who are interested in the hotkeys, risk management, all that stuff, these hotkeys are very powerful. Please do use them. We have the forum section within our Discord so that they don't get lost within all the other channels. So you can find it there. That'll be all right. Let's look at this. If I was going to take, there's no setup on one, but let's say 637 calls. That's out of the money. Entry, if it was down here, would be at about 20 cents, 19 cents. Going out of the money, very volatile stuff. And 637, this thing's probably going to hit 60 cents, most likely, by the time it hits the target up there. So your entry would have been at 20 cents, and it hit 60 cents. Just on an ROI perspective, that's 300%. As in, if you have no stop loss and you let it go to 0, that's 3 to 1 already. And I would put the stop down here, so it would be, call it an 8-cent stop for a 30-cent move. It's not too bad. But again, that's volatile. That's going out of the money. This is very aggressive stuff. And these are the things I wonder about. How can I maximize these kinds of positions? I'm always watching these things to stay up, to see what I can find here. Dan, the hotkeys are located in the forum in our Discord, which is above all these text channels. But the easy way right now is Asgar's put it in the question and answers chat. He's linked it in there, so you just go in there, hit the link he put in there, and it'll take you directly to that forum. It's all in there. You got questions about that, Dan? Please ask Asgar. He's much more attentive to details than I am. I can't do this. What else is on your minds, guys? I'm thinking I want to change these strings on my guitar. That's more interesting to me than any of this price action at the moment. Probably do that tonight. Vinay, how do you identify where buyers and sellers are? Do you look for that only in a 30-minute chart? Yeah. How do I identify them? Well, how and where? Two different questions. What was on the move today? We can find. I think SMCI was the good example. So, Vinay, the way I identified buyers and sellers is how and where. Firstly, I'm only looking for them at these levels, nowhere else. That's all. And how do I know they're there and who's there, buyers or sellers? I'm looking at 30-minute candlestick patterns. That's it. I have specific patterns that I look for on a 30-minute time frame. If those patterns show up, then I will zoom into the 1 minute. And if I find a similar pattern there at the same level, then I'll take it. That's it. And I don't really think of it as buyers and sellers. For me, it's just pattern setups. It's not too difficult to see it as buyers and sellers, but whatever, same thing. Just candle setups. 80-20, man. Don't go too crazy with this. If you look at SMCI, this Avi level down here, yesterday's intraday support area, ABCD, big breakout. You know the buyers are sitting down here. That's what that started that second move yesterday. And guess what happened today? They're still there. Almost precisely. Isn't that something? Cool. If I was to trade this, I would have let this reversal happen, and I would have probably gone long here, 59.40, and then let the rest of it go. Probably. Yeah. Oh, but the setup's not there in the 1 move. There's no consolidation to get going. So nothing. There's no setup here on the 1 minute either. That's how I do it. That's my philosophy. Less complexity is better. Very simply because, well, think of it this way, your technical trading should be so simple it should only take about 10% of your mental capital, because you really need the majority of your mental capital in reserve to manage your emotions when you are in a position. Whether you're winning or losing, whatever, you need to manage yourself. You need as much energy as possible for emotional intelligence. Otherwise, you're never going to make it as a trader. So all this technical stuff, to me, I just view it as, child's play, just easy. So I can really save myself. When I really need it for when I'm in a heavy loss, like 6 figures loss, multiple 6 figures loss, or a multiple 6 figures up, and I haven't even taken a partial yet. That's when you really need to hold yourself together. And so I'm saving my energy for that stuff. Technical trading it doesn't take me much. It either is there or it's not there. Not much else. It's only black and white.
If technical trading, like learning the technical aspects of it, takes a year, then how long would it take in comparison to master the psychology part of it?
Well, it takes different times for everyone, right?
That's
Is it going to
true.
take you a year? Yeah, it shouldn't take you a year, or it shouldn't take any adult a year to figure out 2 different 30-minute candlestick patterns. Probably take about 10 minutes.
I can't trust the way I read the candles without like using other indicators across reference to make sure I'm reading it correctly. Because I'm like, how does the volume look like? But I hear you.
That's the thing. It's that cross-referencing, multiple indicators and all. That's where your mental capital is getting diverted. You're deciphering multiple indicators, and some of them are 80% the way there. Some of them are 70% the way there. None of them are perfect, but maybe together they make sense. Maybe you can put on a trade, and you're going through all this when you're trading. Before you even started a trade, you're exhausted by the time you put it on. I've done that. I don't want to be there again. See, that's why the simplicity. So, yeah, the more you simplify it, the quicker you'll figure it out, the technical side, and then it's really a matter of maturing into a performer. As in, that becomes now not just psychology, that's evolving as a person, living as a high performance person. Trading is high performance. Then you got to look at role models like athletes and musicians and all these top performers in the world. And that's the real growth of a trader. That's really becoming a trader. Again, that stuff's all there as well. All the various webinars and the course materials all available here. But that's where you really grow. So get the technical stuff out of the way quickly, and don't get lost in all the bullshit out there on the internet. There's a lot of garbage. It's a lot of garbage. I would have been where I am today probably 2 years ago if I didn't waste time on the garbage. I just got distracted, but most of us do. So whatever. Yeah, Dan, go ahead.
Yeah, this is for Rachel and perhaps the rest of the group. I've been doing this for a few years now. And it wasn't until I had the misfortune of running into Avi a year ago that I finally got my act together. I had a pretty good, strong foundation on the technical, but not on the psychological. And studying Avi's book recommendation, specifically Best Losers Win, has been an enormous game changer for me. And now I divide my studies equally between the technical and the psychological aspect. I highly recommend that you follow in Avi's footpaths there, despite all these downfalls.
Thank you, Dan. That's awesome. I'm glad you're doing well, Dan. It's good to have you. You've been around for a while now, and you're doing good stuff. So thanks. Keep it up, man. This is your progress. This is your celebration. So yeah, rock it out. Here's another book, guys, that really did change the way I approach trading. Is The Zen Trader, Psychology. Check this out. It's a matter of talks a lot about detachment, putting on the trade and not giving a crap about it. That's important. Ramon, you got a hot mic? Mic up. Gosh, everyone's got kids running around. Me too. But yeah, The Zen Trader, guys. I mean, seriously, it's just like fantastic book. It blew my head off, along with Best Loser Wins and all this stuff. So, lots of good stuff in there. Cool. All right, guys. It is noon Eastern. Any last questions? Shall we end the session? Get the recording up? Everyone good? Everyone sorted? Everyone know what you're doing and making millions and millions and all that good fun? If you're not, then you're doing something wrong. Everybody. Cool. All right, guys. This has been fun. Every Tuesday we're doing this, right? Q&A stuff, basically. And yeah, we'll end this session now, and we'll see you again tomorrow for Trading the Open. Thanks for hanging out, guys. Take it easy, and I'll have this recording up in the next couple of hours, probably. See you all soon.
Thank you.
Thanks.